Well, hello again, folks. Happy to be back with you again. Just had a nice talk about Rachel or with Rachel. She does a great job for us. And I'm kind of getting excited because things are starting to happen. We were talking about the CRB index and inflation being transitory. I've been in markets for 40 years. It's not transitory. They said inflation was transitory in 76. And we saw what commodity prices did. And I've been following commodities and seeing more and more activity on the commodity side, to where I've been long coffee, sugar, the grains, now getting into the meats, cotton, crude oil. So there's a lot happening, and there's a lot happening now in this index here, this Yeti. Made me think of Yoda and the Jedis, but this is one that's been very strong, kind of like an inflation index similar to CRB. I'm used to the CRB, but this one technically looks better than the CRB. It's been going up for a while, and my range rules were 80 and 40 are uptrends and 60 and 20 are downtrends. When we come down, we're not dropping really below 40. We got 44 on the RSI, 43 and a half. Here's the last dip. Got down to 41. So it's still holding that 40 level, actually from, March, the end of March. We dipped down, but we're still strong and still going higher. And this is something I just put in this morning, the Yeti. The weekly is even stronger, and shows how big this move really is. And it's almost been vertical. And I think after we do this today, we're going to go back and put in some more data and see how far back I can go. But we've had positives. We've got bearish divergence. We've got the moving averages positive. And actually on a weekly, when I look at my range rules up here at the 60 level, and I see a 9-period moving average of RSI cross 60. That's one of the little tricks that I use, and couldn't do it much when I didn't have the computer those first 10 years. But after I got the computer and I could look at these and see, just one second. Now I don't want to zoom out. I want to zoom in. Combining range rules and moving averages on RSI is a whole section I teach in my Edge course. The fact that you have the range rules to give you the trend, but when that 9 will close, or excuse me, simple 9 moving average on RSI goes above 60, it tells me initial upside acceleration. Well, this was 41.81 close, and this price here was 44.61. The RSI went lower, but the price was greater, and that's what I call my positives. And that set a target that it was going up. Plus, I use pivot points, high, low, close, or high plus low plus 2 times close, added together, divided by 4, it gives me this red line. That's the pivot point. It was staying above its 9-day moving average on close on the weekly. And then we had another longer term positive from September of 20 through March of 21. Well, with positive reversals, you can also draw trend lines that are based on RSI points that can suggest where you're going, connecting those 2 closes. And if you notice, when you draw a trend line up there on one of these positives, that 9-period moving average on close stayed above that trend line. So as long as it stays above that trend line, it's still moving higher. So I just wanted to share that with you, and thanks to Rachel, she suggested it. Now, if we look at the Dow Jones, yeah, the weekly's still up, but I notice we're not going back above 60. We crossed it earlier. We've had this acceleration. But when we look at the daily, it's also having trouble getting above 60. So we're pretty much near the highs we made back in May. It's just a retest. But I'm starting to see this bearish divergence, and even my CFG at the bottom is starting to look like it's getting a little toppy in here. And we could see a sell-off, maybe 10, 15%. But I called today's, maybe there's something out there. Maybe we're not seeing everything, or we don't know what it's going to be. But I'm watching very closely this 10-year note and the yield on it, because if you've seen some of my daily fives or what I've done with Bruce Frazier and power charting, these rates have continued to fall. I've stayed with the sell side on the yields, expecting lower. Basically from when I first saw it, and we crossed that, we had gotten up to about 170 at one time, 1.7, but we haven't gone back above 1.7 again. And we started down. The range shifted. The moving averages turned down on RSI, on all my price work. I've been expecting to see a break of 1.0 since early June, because we're not moving higher with the RSI, and it's breaking 40. That pivot point, staying below the 9. So I think we've got, I'm expecting at least to break 1.0 and maybe see 0.75. And if they're talking about inflation coming in, and we're not, they're not raising the rates, willing to let it increase a little bit in the inflation, there's going to be some serious damage done to savings, to people's holdings, and it may scare people. I'm not so convinced that this is going to continue to go up as strong as it's been in the stock indices, in some of these individual stocks. I wanted to look at the Dow Jones to show you what I'm talking about. That Dow is having trouble getting above 60. Now we're starting to get short term. It's getting tighter and tighter, and it's all between 60 and 40. Even though the trend is going up, the momentum is not there. What was the other one I looked at? Oh, I wanted to show you coffee. That's been one of our biggest trades this year. And I had talked about that when it was around $1.05, expecting to see $1.50, $2, $2.50, and possibly $3. Because I think the commodities are starting to really gain the attention of traders. I'd rather trade more of the commodities going forward than I would a lot of the stocks, because I think they're very overextended. And that's why I said I think where's my coffee? I want to just show you what a chart looks like. It's been beautiful. There's the daily. Yes, it got a little overextended. But it got up to that those first targets we had above $2. The weekly has turned up. The monthly has turned up. That's a sign of a good trend when you can get the weekly, the monthly, and the daily. You can see the RSI has gotten back above the 60 level. It's shown divergences, but comes back. It shows positive reversals, projecting higher prices. So that's coffee. Where was, we did the Yeti 10X. Got about 4 minutes if I'm right. Dow Jones. But that 10-year note still falling. And I think with the people talking about inflation, that may be what's out there that's scaring people. Let's just take a quick glance at the S&P. It's pretty much the same type of pattern that I've seen for the Dow Jones. I know the Russell 2000 has been toppy, but we're starting to we had divergences back in here. We sold off. On your charts, draw a line from June 18th of 21 through July 19th. That trend line is going to be a support level for price action. And if we get this to start to sell off, because even the weekly and monthly look toppy and they're extremely overdone. That's Stockholm. I don't want Stockholm. I wanted the DJA. But I'm here to help. And with the range rules, focus on those, focus on the moving averages on RSI to see if they're in 60 or 60-20, because it's having trouble getting above resistance. Maybe tomorrow the unemployment numbers, the catalyst that gets it all going. But there's a lot that's going to be happening going forward. And I think some of the commodity prices have already started. And I was looking at coffee and sugar. They're still in line to continue higher. Cotton is another one. There's the weekly cotton. You can see that trend. You can see the range rules shifted there. There's the weekly. I'm looking for cotton to go above 105. Gold, copper, coffee, cattle. Cattle should start moving too. And we might get to 130, 135. Soybeans. I think we're going to see soybeans. This correction we've had recently could bottom out and turn higher. And the weeklies already look higher. They want to go higher. And the monthlies. When I'm short term, I look at weekday, hour, or daily, hourly, and 5. But when I want to see major reversals and intermediate to long-term trends, I'll look at the monthly, and like we had it last Friday, monthly, weekly, and daily all closed at the same time. So if you need to get a hold of me, CardwellRSIEdge.com is the website. My direct email, trader011@msn.com. Be careful, because I do believe there's something out there that could hit the market. And it's not just the pandemic. Now we're worried about the Delta. But there's something out there. The markets are starting to show there's something that we're not sure quite what it is, but the charts are showing us that something's coming. Take care, and look forward to speaking to everybody the next time. Have a good day. Be safe. Let the markets show you what they want to do, not what you want to do. Take care, folks.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.